Hello, welcome to An Imperfectly Perfect Life, Life Unscripted. I'm Sherry Lead, your host, and today I am speaking with Randy Carver. Randy is a certified divorce financial analyst. He's based out of Ohio, and today we're focusing on two main areas. The first is ways to protect yourself post-divorce to make sure that your financial future is secure. The second is, hey, how about if you decide to remarry or even move in with someone else? We're going to share some of the things you can do to protect yourself and the other person. Even things like that I didn't think of. Hey, if you move in with someone, their homeowner's insurance won't cover you. You need renter's insurance. Who would have thought of that? Well, I didn't. So tidbits like that are coming up. I think you'll enjoy this conversation. And this is not a bad conversation to listen to with your significant other so that you get full transparency on all the financial stuff, the hard stuff to talk about, but much needed in any relationship. Okay, check this out. Hi,
So,
Randy. It's so great to talk to you. I'm excited to talk to you about this issue about finances after divorce.
yeah, it's definitely a important topic because it affects more than 50% of Americans, and especially older Americans.
Yes, and you said older. Are we talking about like 45 and older? Or what are we referring
Well,
to?
I'm thinking like 55 plus, but seems to affect everybody.
Well, yes, and this is, they call it gray divorce, and I hate that term gray divorce. I
Yeah.
wish it was something uh, a little, I don't know, less depressing
Yeah.
sounding.
Yeah.
But as I told you before we came on, I'm right in that ballpark and I'm right at that age group too, after ending a 27-year marriage. And
Right.
I don't know if you knew that I also am an attorney and I practiced, I was an active litigator for a long time and I did a little bit in family law, not
Okay.
at not at the level that we're talking because I didn't handle the higher value dissolution cases, but I always told my clients when they'd come in that they have the same pot of resources and now it's being split between two different households.
Right.
And that's really hard for somebody to wrap their head around. And I know going through the end of my 27-year marriage, that was my biggest fear. And it still is my biggest concern are my finances. So we're going to start out by talking about six essential post-divorce steps to secure financial fitness. I think I have that right. Is that correct?
Yeah. I mean, we talked about some of those things, and I think, first of all, divorce is a emotional thing as well as a financial thing. Taking the stress and the emotion out of it. If you've gotten this far, obviously you're over what could be the hardest part, you know, psychologically. But now there's the reality of what do we do? And of course, the other issue is we don't know what we don't know. So
Yes.
sometimes I think people get caught just because they've may have gotten through the process. They may have divorced well, but they haven't thought about what's the next step. So, I mean, the first thing is just to kind of take a breath and figure out your own financial plan. Because, like you said, things have changed. Whether you're
Mhm.
moving, um, your living situation's different, your expenses are different. So, figuring out kind of a real, um, what do you need and what do you want? And I think sometimes people get so caught up in the money, they put the cart before the horse. Um,
What do
and
you mean
and
by that? What do you mean by
well,
that?
they're so focused looking at the numbers, they don't really look at what they're trying to do. I think the most important
Oh,
is what's your goal? It's kind of like planning for retirement. I think people get it wrong a lot of times because they start saying, I want to retire, but there's
mm,
no specific plan or detail. So, for example, if you're going to plan a vacation, you say, I want to go on a trip. Okay.
yeah.
When do you want to go? Where do you want to go?
Mm,
Because if you say, well, I want to go on a trip and I'm going to take my car, well, that's
yeah.
great unless you're going to Europe. It's not going to work. So
Right.
people sometimes get so caught up in the vehicle that they don't really look at the goal. So I think the first thing is, what do you want? How much do you need? How much do you want? How's your lifestyle changing? Because the reality is, two people really can live for about what it costs one. So it's not like expenses drop. And now you have this less resources than you had before.
That's that's a good point. I didn't think of it that way, but I know from personal expenses or personal experience, saying that the
Yeah.
expenses really don't go down, like they don't go
Yeah.
down in half when you divorce, and but the actual pot does.
Yeah.
So I never thought
So,
about it that way. You're
so
right.
yeah, it's like, think about kind of like, and again, retirement in general, divorced, undivorced, you think of it as a trip. Actually, we wrote a book called The Ultimate Vacation, and that's what it is. You have to know where you're going, when
Hmm.
do you want to get there, what do you want to do, and then you can start to plan the vehicle and the things. Same thing with the future. The second thing is you've got to update legal and financial documents. A lot of
Okay.
times, the big thing people miss is changing beneficiaries. Um, we had a case of somebody, she'd been married 5 or 6 years, second marriage, husband died. She was thinking she'd get all this money. He forgot to change the beneficiary on a life insurance policy.
Oh,
All went to the
yes.
ex-wife, and there's nothing you can do. So it's critical that you change the beneficiaries on your documents. And also, if there's been something promised in the divorce decree, make sure it really happened. One of the places we see a lot of issues is with what's called a quidro, qualified
Hmm.
domestic relations order, and splitting pensions. Because what a lot of people don't understand, the court can issue a quidro, but a company doesn't have to recognize it, and you're kind of screwed. So, one thing we always tell people in the divorce is if you're going to split a pension, you're going to get this document, make sure the company's going to accept it because they don't have to. So, just make
Oh,
sure
interesting.
beneficiaries on retirement accounts, life insurance policies, transfer on death, all that stuff. Also, if you updated
Okay.
your power of attorney, do
Yeah.
a healthcare power of attorney, a financial power of attorney, because your ex may still be listed. So
And
it's
you don't
important.
want your ex to be the one to decide whether or not they're going to pull the plug.
Yeah,
So I
probably
want to take
not.
you I want to take you back. We're talking about step 2, but first you mentioned a book in step 1. Name that book again.
It's called The Ultimate Vacation.
The
It's on it.
Ultimate Vacation. And is that about planning for retirement?
It is. And
Okay. The
it takes kind of the analogy I just mentioned that it's like planning for a trip. You gotta need to know where you're going, when you want to get there, etc. But what most people do, it's a statistical fact that most people spend more time planning the next vacation than they do their retirement. They just don't
Mm.
work on it because it's something out there. But
Yeah,
it's
and they
something.
probably don't want to think about it because it means
No,
they're getting older and they're into their next phase of life. But we have to think about it if we want that ultimate retirement. That could be a really important, great time of life where we actually get to choose sort of what we want to do if we plan correctly.
for sure.
Yeah, and so that I just wanted to because you mentioned that book. I just wanted to highlight that, and that could be found on Amazon.
It is.
Is it-
Yeah, just put
Okay,
my name in and you'll see it
okay.
on Amazon. So
And go
thank you.
ahead and say your name and spell it. Just I'll have in the
It's
show notes
Randy.
also.
Sure, it's Randy, Randy, Carver, Carver.
Okay,
And the book,
great.
again,
Uh-huh.
it's The Ultimate Vacation, um, which focuses on just this.
I am going to pick that up after we are done
Yeah,
recording. That sounds
sure.
perfect. I love the name of the book. And the
Cool.
second thing, where you talked about the legal documents, absolutely. That was the one thing that I did even during the time. So my divorce process took just over a year. And I changed the thing that I changed right away was the power of attorney, just because
Yep.
I thought, okay, there's no way somebody else
Yeah.
should decide if something happened to me, if I have life support or not,
Yeah.
and not my former spouse. So definitely, and then wills. Wills are something to change right away. Any of those things, and I agree with you. People forget to do that, or if you haven't made a will, now's a really good time to
Good
do it
time.
and
For
get all
sure.
those documents in place. Um,
So
And
that's
yeah, go ahead.
Yeah, so that's the second thing. Now, related to that is the third thing, and that's to review and adjust insurance coverage. Because a lot of times people are on their spouse's medical. They may have a new
Mhm.
plan under Cobra. And the big one, again, we talked about life insurance. Sometimes if there's alimony and they're supposed to have a policy in case the ex dies, do they really have the policy? Is it being paid for? Because we've seen issues with that. And of course, just regular car insurance and property insurance. Is it in your name? Is it the right coverage? All that kind of stuff. Because again, a lot of these things are just so commingled. You don't necessarily think about, the jewelry rider on your homeowners, but the homeowners was in your spouse's name, that kind of thing. So it's important to look at all those types of things um, out
Yes, and
there.
that actually I have my real life example that I'm working with now. Unfortunately, my former spouse is willing to work with me on this because in a 27-year marriage, especially I'm in Washington State and what's known as maintenance here, which is what people consider alimony, is not guaranteed, but in a 27-year marriage, it often, especially if a spouse has been a non-working spouse as far as working outside the home, it's usually assumed that some level of maintenance will be given, as it was in my case. And one thing, and I had an amazing attorney, a really good attorney representing me. And one thing that we didn't do that I am now doing on the back end is ensuring that that maintenance is covered by life insurance.
Yeah, exactly.
And so I highly recommend that that's done during the dissolution process. So you're not in my position having
Yeah,
to do that on your own later on to say, hey, I'm applying for a mortgage or whatever it is based on this life, based on maintenance. Um, but hey, it's really scary if I don't have life insurance or something to back it up. So
yep.
definitely, that's such good advice.
So that's a good one. And the next thing is pull your credit report post divorce and see what it looks like.
Mm.
Um, and obviously close out any joint accounts like credit cards and make sure this spouse does too. Because we have people run up debt, and that can just be a mess as far as that goes. And consider freezing your credit, um, at least temporarily, but it doesn't hurt to freeze credit for anybody.
Oh, so you can freeze your credit. What does that mean? Freeze your credit as opposed to closing a
That's a
credit
good,
card.
that's a great question. So closing credit card just means closing out the account. When you freeze your credit, and you can do it on the phone or you can go online with the big credit agencies like Equifax, it means if anybody tries to get credit, they can't until you unfreeze it. It's locked. So people can't apply for stuff in your name. It can really help protect you from identity theft. But as part of the divorce process, it can protect you as well. And so um, it's easy to do, takes about 10 minutes. And then to unfreeze it, you just call and you give them some information.
So
But
you
it's a
actually
good
call
thing.
the credit reporting agency to freeze
Yes.
your credit across the board? Is
Yes.
that
And
what
I
you're
can
saying?
I could send you some stuff. You could put it in the comments about how
Okay.
to do that. But I
And
think
that
that's
doesn't affect your credit score.
no, not at all. Not at all.
Oh, that's
Um,
excellent.
and then finally, to understand and organize assets, make sure the quidro is complete if you have one. Know the tax consequences of your settlement. For example, if you had pre-tax money, do you owe
Mhm.
tax? All those types of things. Um, if you're selling a house that you jointly owned, how are you splitting that? Those types of things. And then finally, and I think this is really important, and you alluded to this, is to kind of set some really clear goals for yourself. Like these are short term goals, these are long-term goals, whether it's home ownership or savings or retirement, any of those types of things. Um, and especially if you're re-entering the workforce or maybe changing, just to understand how that's all gonna impact things. So, um, I mean, an emotional recovery is essential, but financial recovery, is kind of empowering once you have a plan. It makes people feel better.
And I would recommend now, I didn't do this? And so this is coming from experience. Fortunately, uh, my attorney was very savvy, and she's handled a lot of cases involving businesses, financial issues. So I had a lot of good advice going through, but I highly recommend if you're going through a mediation or divorce process and there are assets, you've been in a long-term marriage, to consult not just a divorce attorney, but also a financial expert. And I would recommend consulting a financial expert that's dealt with high value divorces, if your divorce is a high value divorce, or if you have a business with your spouse, especially, or if your spouse has a business or you have a business, talking to a financial expert on how that plays out in your divorce process, and a house too, selling a house and
Yeah,
taxes related to that. Um, because when you're in that emotional state, you may decide, on the house, selling a house, and you're not thinking about the next year when those taxes are due if neither of you buy another home, and those capital gain taxes could hit really hard. And what would that look like? Are you filing jointly? Are you filing separately the following year? And how are you splitting that liability? Those are things I
yeah.
think are important going into a divorce process.
I would take it one step further. Instead of just the usual advisor, even if you have one, I would use a certified divorce financial analyst, a
Mm,
CDFA, because they're specifically trained to handle a divorce and look at the implications of things. And frankly, they're not, I mean, ethically and legally, they're not going to tip things one way or the other.
mm,
But a lot of times, even the attorneys don't realize some of the implications. For example, if you said, we have $1 million of assets, I have my $500,000 401k, and we have 500,000 in CDs. You take the CDs, I'll keep my 401k.
mhm,
Well, you just hurt yourself because your money hasn't been taxed. Theirs
mm.
has. So essentially, instead of a 50-50 split, you got about 25%. And so that's where a certified financial divorce analyst can help um, really look at all those types of things and kind of, because again, you don't know what you don't know. Come up,
Yeah,
because obviously the best thing is to structure the deal beforehand than trying to fix it after the fact, because it's a lot tougher. So
absolutely. You can't get money back. It's
now,
hard to get money back. And it's basically most of the times you have no leg to stand on at that point when all the orders are signed. So, you said CFDA, Certified
C
Financial, is that correct?
C CDF,
CDFA, Certified
Certified
Divorce
Divorce Financial
Financial
Analyst.
Analyst. Okay.
And there's
Is
a
that state
association.
specific? Is
No,
that, oh,
no,
okay.
but that's a good question because you'd want one in your state since the rules with a lot of things are state specific, but the designation's a national designation. It's like going to a MD or to a lawyer. Um,
Mhm.
and you can reach out. People can Google and find um, the trade association and find somebody.
Well, that's such excellent advice. And I would, that should be right there with your search, with your consultations with your attorneys if you're considering. And I spoke to a divorce attorney from Texas not too long ago. And she said that if she could have her wish, clients who are considering divorce or dissolution, especially after a long marriage that has a lot of issues in it, which long marriages do because your lives have been, intertwined so deeply, that she would love to have her clients come to her a year before to
Yeah,
talk to her about what are the possible issues that will come up. And that doesn't mean they're going to get divorced, but that means
right.
that they're equipped with knowledge. And I would imagine the same would be true going to a CDFA. The earlier you can get to a CDFA, if you're even considering that divorce may be in your future, understanding what you're looking at can help ease any anxiety and help you in this process of deciding, okay, is this the right decision for me? Is this the right decision for my family?
Yeah, for sure. So,
So, okay, so
um,
now the divorce is all done. We've
yeah,
got the six steps, and I'll put those down in the
sure.
notes. I think I've tried to jot them
Yeah,
down
I'll send them
quickly
to you. I'll
over
send you
here.
some stuff.
Okay. Uh, But we also, so let's just say the divorce is done, and now you're going on with your life, and you meet the Mr. or Mrs. or future Mr. or Mrs. Right, and you're going to get married a second time. So there are, and you already, you have hopefully some assets left from what you've built in your first marriage. What are um,
Yeah. So,
things you could do to protect yourself or that you should be aware of going into a new relationship, a new marriage?
all right. So let's talk about 5 steps to protect assets in a second marriage,
Hmm.
because obviously second marriages can be great, but they also come with some financial complexity, especially when one or both bring significant assets, or there's a big difference in net worth. One
Hmm.
person has a lot of money and one doesn't. So the first thing is you got to get a prenup or a postnuptial agreement. Um, it's not even for the legal terms, but I think it's a good discussion, so people understand what's out there. And frankly, if someone doesn't have one, you could still do what's called a postnup agreement. Keep in mind, for the agreement to be valid, you must disclose everything you have. If you don't disclose it, then the whole agreement becomes null and void. So, um, having that conversation, here's what I have, here's what you have. Yes, we're together. Yes, maybe these are the assets we're going to put together. But, in the event this doesn't work, because statistically, and I still never figured out quite why, but second marriages um, have about a 30% success rate. It's like
Yeah.
60, 70% fail. So um, I think it's important to look at doing a post-nup, or excuse me, a prenup or a post-nup agreement, so you kind of know what's happening. Second of all, keeping some assets separately, because if you don't keep business assets or inheritances separate, they become a marital asset. So if you're coming in with things that are yours and you keep them outside, then it stays yours. Now, if you
Randy,
have a,
you're taking the romance out of this.
I know. Um, Well, they say love is grand, but divorce is 100 grand. So, you know, um,
Oh, that's so
one of those
painfully
things.
true.
Um, so I think agreeing what's going to be together, what isn't, and just knowing the implications is important. Now, even if you keep assets separate, once you're married, as they grow, their growth is a marital asset anyway, but just easier to track. Um, and then the third one, we touched on this before, but it's really important, is to update the estate planning documents, especially where, you have kids from the first marriage. Now, as a second marriage, if something happens to you and you want to protect your kids, that there's some estate planning you may want to do um, to protect kids from first marriages.
And do you know, this may be a legal question, but you could contract for anything. I would imagine when you're talking prenups and wills, estate documents, because if you're married, let's just say you have a house together, or one partner moved into that house, and that house is still separate property. Let's say the wealthy person, the less wealthy moved into the wealthier person's house. And so in those documents, you would also want, and this could be in the prenup maybe, or in the will, or both, you would also want to make sure that the person who moved into that house is protected at some level. Either they're allowed to stay there if something happens to that person who owns the house, or they're given a period of time to find a new place to live if that house is going to the estate or the kids of the wealthier person. So those are all things to consider if you're cohabitating together. Even before, I would think, even before marriage, if one person's moving into the home of someone else, and this is a later in life second serious relationship, putting that down, what's going to happen if something happens to that homeowner, to make sure that you're not all of a sudden kicked out of that house and, on your own without any way to earn money right away or to get a new place.
Yeah, that's got to go in the estate planning documents.
Mm.
I mean, the
Yeah.
prenup, if you're getting divorced, you're getting divorced. But yeah, I mean, the scenario you're outlining is
Hmm.
the prenup. The other thing that people don't think about that's important if you're not married, but you're living with somebody, that the person that moves in should get renter's insurance because otherwise
Oh,
their stuff is not generally covered under the homeowner's policy. So if
oh,
something
that's
happens,
interesting.
even though, you're living with someone forever. I mean, I'm not married, but I've lived with someone for 16 years. But my homeowners wouldn't cover her stuff because we're not married. So it's important that somebody has renter's insurance, um, both from an asset standpoint and potentially a liability standpoint. So
Yeah.
um, to think about that. Um, I think the other 2 points, one is to kind of clarify who's going to be responsible for what, just so there's no stress. I'll pay the mortgage, you pay this, or
Mm.
whatever it happens to be. Just an understanding, so that there's no misunderstanding. And then finally, and this is a big one, if you're going to get married, making sure there's some protection for healthcare. You get married, you got your stuff, then your spouse ends up in a nursing home, and now you've got to cover it because you're married, and that you
Mm.
lose your stuff. So, how are you protecting? Do you guys have long-term care insurance? Is there something else protecting from kind of healthcare surprises? And as long as
Interesting.
people are living, and long-term care is the largest unfunded liability we have today because people are living longer. Um, Statistically, if you have a married couple, depending how long they live, it's about 70-80% chance one of them will need some form of long-term care. And so it's a really important thing to at least look at
So,
financially.
so are you saying that even if a couple, let's just say, had a prenup where basically both assets are separate, but anything, of course, earned during the marital time becomes commingled or becomes community property or however it's looked at. But are you saying that even with that prenup, if somebody goes into long-term care, then because the way coverage is
Married,
looked at, they will look
they're
at those.
married.
So even that
Same,
separate property with prenup, they don't care.
doesn't matter.
They weren't parties to the prenup. The
No,
law, yeah, and so
that's
they
why if
can
you
still
get
go after the
divorced.
separate
Yeah, I mean, it's the same
property.
thing if they cheat on their taxes or you file a joint tax return, you just sign it. You don't really, you're responsible. They run up a bunch of credit cards. You can be responsible because you're married. I mean, so yeah, it's important that the prenup's only if you get divorced. And even
Mm,
then it still could be a fight. Um,
yeah.
it just helps. But it certainly doesn't protect assets in the event of a creditor or a lawsuit, as far as that goes.
Wow, like we're really making
Yeah.
love brand here. So in addition to consulting an attorney, a financial advisor, I suggest you also consult a third-party counselor as you work through all these
Yeah.
issues. And the good thing, as I hear you talk about how to protect yourself basically in a second marriage, the good thing is that you're talking honesty here. You've got to put all your cards on the table.
Yeah.
So I guess that's the positive of this. You know what you're looking at and you know each other's concerns.
The other thing, and again, not to try to talk everyone out of getting married, but I think it's important to understand some of the other implications. Um, for example, remarrying after age 60 can impact your ability to claim a widow or widower benefit on Social Security or a
Oh
pension.
yeah.
So let's say your previous spouse getting a pension, significant amount of money. Now you remarry, you're probably not entitled to that. Um,
Right.
Now with Social Security, as long as you were married for 10 years, you can claim on your ex's record. Regardless, the divorce doesn't impact the Social Security, but you may lose um, access to military benefits, um, those types of things. So somebody receiving a late spouse's pension or survivor Social Security benefits before they get remarried. So let's assume their spouse died.
Mhm.
They didn't get divorced. Now they go to get remarried. Um, it's really important to evaluate all entitlements before marrying. Um, Sometimes maintaining a legal separation maybe more financially prudent than actually getting married. The other thing is when you have
Mm.
unequal financial expectations, um, later in life, couples often come from different financial backgrounds and have different views on spending or gifting, or,
Mhm.
one wants to give their kids everything and the other just doesn't want to spend. So to your point, having that conversation, um, I think is really important. Um, Conducting kind of a compatibility check before marrying, as far as how much do you want to spend? What do you want to do? How do you feel about giving kids money? That kind of thing
Yeah.
can be really important because a lot of times it's money that causes the divorce. So,
Mm.
maybe head off all those issues. Uh, Say, look, I'm gonna, you know, I'll live with you, but we're not getting married. I'll do my stuff and you do your stuff, and we'll pay for the expenses together. Uh, Maybe that's the better way to go. So, at least going in understanding um, what it is, because the other thing, like I say, as we age, healthcare and long-term care become increasingly relevant and also expensive. And
Mhm.
sometimes,
Yeah.
people think, oh, my new spouse is going to take care of me. Well, maybe, maybe not. Um, so it's one of those things I think it's important to look at from both sides. Plus, if your spouse becomes ill, is it going to drain your resources?
Yeah. Wow. These are so if somebody was getting married a second time, it seems like I mean, a CDFA, that's a designation. You're a financial planner. So I would go now after talking to you. I mean, I do have a finance guy. I don't think he's a CDFA, but I really think he's good. But if I was going to do it again and I was looking for somebody, I actually would look for somebody who has a CDFA designation because planning the second marriage,
Yeah,
I would look at it going, hey, what should we worry about? And I would think somebody who's dealt with a lot of divorces may be able to actually point out
yeah.
things that we wouldn't think about to
Pick
put
up
in our
the
prenup.
yeah, pick up the minds. Yeah, for
Yeah.
sure. But I mean, to your point, at least working with a good financial planner, it's
Mhm.
independent, not a sales guy, but someone who really does
Yeah.
planning and look at the taxes, the estate planning, the legal, the insurance, all that stuff, and say, hey, maybe these are the things you should be aware of um, going in. Because it's never the bus you see coming that hits you. It's the thing you don't.
You're just
Um,
making this more romantic as we go along, this
exactly.
idea of
I
couples.
know.
It's not the
What
bus
is it
that
they
hits
say?
you.
Next time, just find someone you hate and buy them a house. So, uh,
I bet I could just imagine how fun your conferences are. Oh my
exactly.
gosh.
But,
Wow.
once you get past all that, then I think, you can move on. But I think it's
Yeah.
important, at least to be aware. Because you're right, people don't want to think about all that stuff. And they don't want
Yeah.
to necessarily talk about it either. But it's a really important conversation, especially when there's a big disparity in wealth,
Hmm.
which we see, a lot.
Yeah.
Uh, so it's
Yeah.
one of those things.
Wow. Well, this was such a good conversation. I learned a lot. I feel like because I'm right here in this
Oh,
place in my life, I feel like this was like a freebie for me. So I
there you go.
appreciate it. And I will put all your contact information, including yeah, how many books do you have? Is it the one
I've
book
actually
or
done I've actually done 5 books, but the
okay.
two I think are relevant. The Ultimate Vacation. In fact, I'm gonna look up, give you the real title. And
Okay.
then we just had a book come out about 5 weeks ago. It's an
Oh well.
Amazon top seller called Limitless: How to Defy the Odds, Master Your Mind, and Achieve the Impossible. Um, and that's been it's a really interesting book. If anybody's kind of struggling, hopefully they find some inspiration um, in that. But
Yeah.
the other book, the full title is Ultimate Vacation: The Definitive Guide to Living Well Today and Retiring Well Tomorrow. Because it's
Mm.
all a balance. I mean, you don't want to,
Yeah.
you know, you need to enjoy today because you don't know about what's going to happen tomorrow.
Right.
Um, so it's those are the two books. Like I say, they're on Amazon.
Well,
And if people have
excellent.
questions, I'm happy to answer emails or calls. They can reach out.
Perfect. Well, thank you so much. Thank you. I feel like this is going to be incredibly eye-opening to
Good.
a lot of people. I'm going to
Yeah.
digest this conversation
It's a
after
lot.
we're done. It is a
Yeah.
lot. It is a lot, but knowledge is power.
It
And
is.
once you wrap your head around it, it actually, after you get out of the shock, it actually is relaxing to be able
Yeah,
to realize you have control over
for
all of
sure.
this, and it's not hidden secrets or anything like this. It's just
No.
knowledge and knowing where to look and what to do to protect
Right.
everybody.
Yeah, for sure.
So, all right,
Cool.
thank you so much. Have
Okay,
a
good
have a
talking.
great afternoon.
Thanks, you too.
Bye.
Bye bye.
And that's a wrap. I hope you enjoyed this week's episode. Randy's contact information is in the show notes. My contact information as well. I'd love to connect on whatever your favorite social media platform is, or if you want to sign up for my newsletter, online course, purchase Table for 51, my latest book. I would love, of course, to connect with you in that way. Until then, have a great week. See you next week.